Hey everybody, today's Tuesday the 31st, and don't forget we have a webinar coming up today. The market experienced a real strong half hour, the last half hour of the day that is, on these two 15-minute candles here. You can see it ramped higher. We are above the anchored VWAP from the peak, which had originally been trying to offer some supply, but we got back above that, and buyers were back in control. Looks like we're headed for another test of the anchored VWAP from the high. And buyers are in control. We have the Federal Reserve tomorrow, so expect a lot of misdirection around that time. When I say misdirection, I mean, initial rally might occur and then a sharp sell-off, or the opposite. It generally takes 2 to 3 days for the market to absorb the initial volatility from the Fed before it picks a direction after those meetings. So keep that in mind. Be very cautious tomorrow, especially around that 2 to 15 time. The Nasdaq also rallied here. It's back to approaching the prior resistance in here. We held the rising 5-day moving average. We're continuing to move higher, back above the anchored VWAP from the January high. So buyers remain in control. It's extended. So with a catalyst coming, you've just got to be quite cautious in here. The Russell 2000, we've got the anchored volume weighted average price off the all-time high just up above. We have been holding the AVWAP from COVID here the last week, so that's a good sign. We're above a rising 5-day moving average here as well. Looks like it's headed for a test of this anchored VWAP, and will it be similar to the last time where it spent a couple days around that area and then be able to move then rather fail and come back down. This time we have that 200-day moving average just about to flatten out here in the next few days. So it's important. What it means to me is the market is at a potential crossroads. It doesn't mean that we're going to become bullish on the entire market all at once. It's still part of the process, the bottoming process. So when you look at the weekly time frame of the Russell 2000, we're in. It's very reasonable to argue we're in stage one accumulation since all of these moving averages have been crossing back and forth. That's the hallmark of accumulation and of distribution is moving average crossovers. They come during periods of indecision, not during trending environments. During trending environments, you see, the 10-week below the 20, below the 30, below the 40, and them all declining. In an advancing market, you see the rising 10 above the rising 20, above the rising 30, above the rising 40. And when we see those moving averages crisscross, it doesn't mean we're always going to get a reversal. Instead, in this case, it would have been reasonable to think maybe we were going to go down, but it rallied up and then that failed move led to it. So there's no saying that this is accumulation. It might be similar to over here where it looks like, hey, it breaks out and then it fails. We just don't know. We only know in hindsight. So is it, this could be a larger stage three, and it breaks down further from here. It doesn't seem like it, but you just don't know till after the fact. Meanwhile, we continue to have indecision, but in that indecision, we have constructive action, and it pays to manage risk based on your time frame if you're getting involved in this area. The semiconductors did not fail as I kind of hoped they would. Really, I wanted them to come down to the conjunction of that 20-day, the year-to-date VWAP, and the COVID volume weighted average price. Instead, we saw some strength here at the end of the day. Again, it doesn't mean that this market might not just get the crap kicked out of it tomorrow. We just don't know. So when we have a catalyst such as the Fed that has the chance to raise the volatility in the market, it means we just go slower because of that potential for heightened volatility. The financial stocks are breaking higher here. So again, this market, very similar to the Nasdaq last week, is breaking to a new high. It's extended. So, be careful if you're chasing following this market. A lot of people are probably, I really don't pay a lot of attention to Twitter during the day, but when I do, I pay attention to, like, notifications and not really so much what people are talking about. But, when people start talking about, hey, financials are breaking out, ask yourself, where has it come from? 33 and a half to 36 and a half. It's rallied 10%. Now it's breaking out. Is that the time to be a buyer? I don't think so. You know how I feel about that. The XBI is behaving well. So here's what I see so far. We have this, we had that breakout, the pullback. We had another rally, a pullback. This looks like a higher low. If you're involved in the biotechs or looking to get involved in the biotechs, I think you want to buy them at a place, maybe after a pullback like this, and then buy it right here with your worst case stop right now underneath this level. It's uh, too early or too late to come up with a low risk entry right here, right now, but it's definitely worth continuing to keep an eye on it.